So how do you transfer rental property into an LLC? So look, if you are planning to get into real estate or you are a current real estate investor, then at some point you will consider having an LLC for your rental properties. And I recently had a family member ask me about this because he has several real estate properties and his personal debt to asset ratios were getting high. So he wanted to know if he should move his properties into an LLC. And I thought this was a really great question that millions of other people probably have as well. So I decided to make a video to cover why transfer real estate into an LLC, the tax consequences and outcomes of making that move, and of course, how to move a property into an LLC step by step. So if all that sounds good to you, please do me a favor and like this video now or at any point during the video that you feel like I have earned it. It goes a long way in helping this video reach more people like you who need to learn how to transfer real estate into an LLC. Stay tuned. Hey there, welcome to the channel. I'm Sean with Life Accounting, the accounting company that helps you save on taxes and build more wealth. Okay, let's get started by looking at some of the benefits. And number one, why transfer real estate into an LLC? So as a property owner, you may be wondering if you should move your real estate into an LLC. I have 8 reasons why that may be a great move to make. First, number one, protection from liability. One of the biggest advantages of an LLC is that it offers protection from personal liability. Meaning, if someone is injured on your property or you are sued, your personal assets will not be at risk. Reason number two, flexibility. An LLC can be structured in several ways, allowing you to control how your business will be managed and operated. Reason number three, tax benefits. An LLC can provide tax benefits depending on how it is structured. For example, an LLC can be taxed as an S corporation, which allows the owners to avoid some self-employment taxes. Reason number four, increased credibility. So having a property in an LLC can boost your business's credibility. Potential tenants and partners may view you as more professional and trustworthy if they know that your property is in an actual business corporation. Reason number five, real estate partnership opportunities. So by transferring a property into an LLC, you can create a partnership with other investors. This structure may be beneficial for many reasons, including shared risk and greater profit potential. Reason number six, keeping your properties protected. So if you have an LLC for each one of your real estate properties, this can be beneficial both from a taxation standpoint and an asset protection standpoint. Reason number seven, business and personal financial separation. When you move a property into an LLC, you create clear separation between business expenses and personal expenses, which can simplify the accounting and tax preparation. And reason number eight, peace of mind. Simply knowing that your property is adequately protected and you have no personal liability can give you a lot of peace of mind as a property owner. Okay, so that's the good news. Those are the pros. But let's look at this objectively and talk about number two, the cons of having an LLC for a rental property. But really quick before I dive in, I want you to know that I have a new personal YouTube channel called Sean Stanberry. So if you want more videos from me, please click the first link down in the description below or go on YouTube and search Sean Stanberry to find me. If you subscribe, please tell me by leaving a comment on one of my personal videos so that I can personally reply to thank you. All right, let's get back into it with number two, the cons of having a LLC for rental property. Because look, there are some real drawbacks to transferring a rental real estate property into an LLC. Let's talk about it. First off, number one, mortgage and insurance rates will likely increase. And that is because, okay, the major downside of moving a property into an LLC is that the rates go up because you need a commercial loan. This is because lenders view business as higher risk entities and thus they charge a higher interest rate to accommodate for that risk. Con number two, personal guarantees. So lenders may also want a personal guarantee from each LLC member before issuing a mortgage loan. This means that each member will be held liable for the entire loan amount even if the LLC fails, which makes getting a commercial loan less attractive and more challenging. Con number three, Moving a property into an LLC may also trigger unintended tax consequences. Because look, when you move a property into an LLC, it may trigger a reassessment of the property's value and thus the property taxes. It may also trigger other state and local taxes as well. And all of this can create more obstacles when you are planning to sell your property or take loans against it in the future. Okay, con number 4, setting up an LLC can be costly and time consuming because now you need to file an annual report with the state and pay an LLC filing fee. In some states, that can be as high as $800 per year. You will also be required to file additional paperwork with your state and with the IRS and be required to keep meticulous records of all your business activities. Okay, con number 5, limited liability protection is not absolute. One of the major advantages of an LLC is that it shields you from personal liability. However, that is not always the case. If you fail to follow the regulations and rules around an LLC, then the court may find your LLC to be defective, thus exposing your personal assets. Okay, let's move on to the third part of this video and talk about number 3, how to transfer a rental property into an LLC step by step. So moving or transferring a property into an LLC is super easy. Let's go over the steps. Step number 1, contact the lender. Because if you have a loan on a property, you also need to transfer that loan into the LLC's name and then talk to your lender about that process and what costs may be incurred. Typically, you may have to pay some type of transfer taxes and a lender processing fee. Once you understand your bank's process, then eventually they're going to ask you to provide information about your LLC, which means you need to move on to step number 2 and form your LLC. To form an LLC, typically you will register with your state's Secretary of State office. There you will need to provide some basic information about the LLC, like the business name, the address, and the contact information for the registered agent, which, by the way, you can be the registered agent. Next, you may also need to provide your state with an operating agreement to confirm the LLC's purpose, how it would be governed, the rights and duties of each member, and so on. The operating agreement is not required in all states, but I think it is a good idea to have one even if it is not required. If you need to create an operations agreement, then I personally recommend using a free template from Law Depot. Their website will walk you through step by step of exactly everything you need to consider having in your own operating agreement. I'll put a link down in the description below if you want to access that template. Step number 3, obtain an EIN. An EIN is a federal employer identification number that is 9 digits long and assigned to your business by the IRS. The purpose of an EIN is to identify the company for tax purposes. So when you apply for an EIN, you will be asked to provide information about your business, the legal structure, the type of business it is, and the principal place or the location of the business. You will also be asked to provide information about the owners, such as the owners' names and their social security numbers. Now, once you are assigned an EIN, then you could use that EIN number for all your federal tax filings, such as your annual tax return and your payroll tax forms. You will also need an EIN number for step number 4 when you set up your LLC bank account. The banks will usually request your EIN number and a copy of your articles of organization to make sure your LLC is in good standing. Now, once you provide all the documentation, you should be able to easily set up a business bank account. Just make sure you shop around for which banks may be best suited for you and your business need. I have an entire video on my personal channel where I break down 5 business bank accounts every entrepreneur should consider. So I'll link that video at the end of this one so you can watch it right after you finish. Okay, moving on to step number 5, transfer the property title. So anytime you want to change the property's ownership, you must file a deed with your county clerk. The most popular types of deeds are going to be a quit claim deed and a warranty deed, but there are definitely other variations as well. So when you're ready to file, make sure you list yourself as the grantor, which is the person who is giving up the property, and your LLC as the grantee, which is the person that is receiving the property. Now, the process for filing may vary depending on your state and your county, so you'll want to call your clerk beforehand. In most cases, all you need to do is provide the original deed, complete a transferee affidavit, and then pay a filing fee. If everything is in order, then the county clerk will record the deed and transfer the property ownership to your LLC. Okay, and then step number 6 is to update all your official documentation. So you might be the only person involved in your LLC, but from a legal standpoint, your LLC is a separate entity. That means that when it comes to signing legal documents, you should always list your LLC as the owner or responsible party. In addition, you will want to update any leases or permits or contracts or loans that are in your personal name and reflect that into your LLC's name. That also includes any utilities or expenses you have as well. Finally, once everything is transferred in your LLC's name, then make sure you keep records of everything. That way you have good evidence and proof that your LLC is now in control of the real estate business. Now, here's a very important tax note. For the most part, transferring a property into a single member LLC should have no tax consequences. This is because the IRS views an LLC and the owner as the same. So when it comes to filing taxes, the LLC will be taxed just like any other individual. However, if you are partnering with other people in your LLC, or if you convert your LLC into an S corporation, well then now you can trigger taxable events anytime you transfer ownership in the future, because now the IRS will see that as a sale of a rental property instead of a transfer. So basically, transferring a property into an LLC is easy, but transferring a property out of an LLC can expose you to capital gains taxes. So you'll definitely want to think long-term of the use of the property and how that may impact your taxes. All right, coming up next, I want you to check out some more business videos on my personal YouTube channel that you may enjoy as well. So check those out if you haven't already, and I'll see you over there.